Good day, guys. Welcome to the Strategic Day Trader. I hope we are all doing well, and I believe we have been profitable in the past trades that have given out analysis for you to use. So today we'll quickly take a short preview of what has happened in the past. From what has happened in the past, I give you some hints on what will actually happen. Okay, and it happened exactly as we have stated it. For those that have gone through the video, you would have seen the results that the way we predicted price is exactly what has happened. Okay, so I used almost all the time frames from 5-minute chart, 15-minute chart up to the 1-month chart to explain what is likely to happen. Okay, and we have been very successful in our prediction. Exactly the spot to which we said reversal will take place, reversal actually took place at that exact spot. Okay, you know the strategy. Have a checklist, and the checklist is from both the support and resistance to the confluence to stops taking out to price action and others. Okay, so for those that have not gone through my checklist strategy, please go ahead and check it out. The secret to my success, to my analysis, I've given it out, and I believe that if you watch that video, you will have a great clue about what I'm talking about. I've always emphasized it. Trading is not as difficult as you think, and my strategy eliminates you from trading anyhow. Okay, it gives you the exact buy points and also the exact take profit. It also gives you the exact stop losses, so that in case price will go against you, you will know you will be taken out of the market before it causes damages to your account. It is very important that you have all this strategy working well for you. I've always emphasized also that using indicators is not a good thing for you, so please try to avoid using indicators. This strategy is simple enough and it's easy for anyone to learn within a day or two or even a week, and you can start trading profitably. So all you need to do is just to practice it using the demo accounts and see what has been happening. Before you know it, you are turning to become a guru. So now, what has happened in the past? Like I said, we're having some wranglings here. Okay, this, we had this, and I said that if we can have more of this like this, it will be a good setup for us. So what does that mean? What does that mean? That means stops have been created in all this area. Okay, bunch of stops have been created in all this area, and that is where the money is. Unfortunately, they gave us more of that. Okay, they gave us more of that. If that's more here. So let's just group everything together. Okay, so they gave us more of this structure, and that's where the money is. So we are going to include all these aspects. Okay, so this is where the money is. So what it means is that price we want to move in the direction of where the money is, and that's what has happened, and that's the reason why they drove the price upward, to take out all persons, all traders placing their stops around this area. Why are traders placing their stops around this area? Believing that market will sell. Okay, so believing that market will sell, what traders do is this: they are selling. Once price have gotten to a point here, okay, they are going to place their stop somewhere around this area. Okay, here. Now, the more price is coming to this area, people generally will be saying, oh, look at double top. Oh, the top is strong. That is the reason why price is being rejected downwards. Okay, that is the logic. But I tell you, it is a psychology that they are playing on you. So for instance, look at, you have been placing your stops in these areas. Now you have brought your stop down to this area. What did they do? They still allowed you to bring your stop to this area. Okay, more stops brought to this area. Okay, now what did they do next? Is that they took out all the stops. Can you see? So all your stops that you have been placing at this area have been taken out using this. So they have taken away all your money. Okay, you know, I also said that you will also be using stop loss. Okay, so that in case price will go against you, you will be taken out, so that damage will not be caused to your account. It is a normal way of trading. It's the best way of trading. You have to use stop loss. Okay, you need to use stop losses. Okay, so that your accounts will not be. I've seen accounts, even my own account, not once, not two times, not three times, that have been wiped out completely up to zero level. Okay, up to zero level. I've seen someone that lost over $10,000 in just one day. I've seen someone lost over $15,000 in 3 days. Okay, so this is as a result of no stop loss set. If you set your stop loss could even just give them like $2, $3, $5, $10, depending on the the size of the instrument you are trading. Okay, the size of the currency or crypto that you are trading. Okay, so if your trading size is high, probably maybe about $50 or $100 or $200, it won't take more than that amount. Okay, and if you are going to make profit, you also make profit in a double. From my strategy, you make double of your stop losses. Okay, you make double of your stop losses. That's the minimum that you can make for my trading strategy. The minimum you can make is double of your stop loss, and from the analysis I'll be giving, you will be making even 4 times of your stop losses. You will make 4 times of your stop losses. Okay, so now the strategy is all you need to understand, and that is what I have been giving you. Okay, so for instance, you have been moving your stop losses, okay, from here to here to here to here. Okay, it is a psychology they are playing on your head, and the psychology is that you will continue to believe that these stop losses are working for you. Okay, or you are trailing the stops. Okay, but at the end of the day, what did they do? They took it out. Okay, so how did they get to this? How is the strategic day trader working? So how the strategic day trader works is this. Okay, for instance, we say that this area, for instance, let's use this area. Let's just use this one. Okay, this area of stop sale needed to be taken out. While price was trying to come and take it out, price missed that point. Okay, and that's the reason why we have a space. This space that you see between a stop, okay, is what we call a miss. I'll usually circle it. Okay, we call it a miss. This space is called a miss. So this miss is what is to us, this is our own psychology. That's what they are trying to do, is that they are trying to make you to bring your stop from here to this point. Okay, but we call it a miss. So don't let us look at what they are saying now. What are we saying according to what is going on is that these are stops. Okay, that we know that stops losses will be kept here. Okay, now this price was coming to take the stop out, but unfortunately it stopped here. Okay, now stopping here, creating a space between here and here. That space is what we call a miss, and that miss will do what? Will give us a retracement. Okay, the miss will give us a retracement. How long can your retracement go is another topic. Okay, is another topic. Now don't let us go to how long your retracement can go for now, but all we need to also see is that, what do you see? You see here. Okay, and that is what they have done. Okay, so the retracement came to take out all the bunch of stocks that have been accumulated in this area, because the same way stocks are created here for takeout, they are also creating the downside. So what they usually do is, as they are creating stops above, they are also creating stops below. So once stops are taken above, stops will also be taken below, or if stops are taken below, stops will also be taken above. Okay, so now they usually employ that psychology. As I have said, the same psychology that they employed at the top is what they did at the bottom. I will show it to you. Now look at what they did. This is what they did. Look at here, there is a stop here. Look at this, was supposed to come and take out this stop. What did they do? They missed it. Is the psychology. They came back again, they made a retracement. We told you the miss will cause a retracement. They made a retracement. Okay, and coming back down, this place is also an area of stops. Okay, double stop here, that's one, and 2. Okay, can you see the double stop there? Okay, now they missed it. They missed it here again. What did they do next? They retraced a little, then broke it. So they took out everything here, including this one. So what the miss does, it causes retracement, and at the same time they are coming back. The next time they are coming back to come and take out both the miss and the stop that caused the miss. This stop caused this miss, this stop caused this miss. Okay, this particular stop caused this miss, this particular stop caused this miss. Okay, so they will take them all out, and that's what they have done here. So remaining the top. Now in the process, they continue their wranglings. Okay, so all you need to do is just to continue to monitor their movement. Okay, so but on a general view, if you are tired of just going through all these minor movements, you just take it on a general view. So to take it on a general view, you need to consider these areas here. Okay, so looking at this from a myopic view and looking at it from a bigger view, you consider the left side here. Okay, what is happening around this area? Okay, it is very important. If you are thinking of going up, you'll be looking at what is happening around this area. Okay, but for now, what are we seeing? We saw that price was crashing down. Now in that process, where are price got into? Not considering what is happening here for now. Okay, let's say this area. Okay, we are not considering what is really going on here. Okay, so this was where we are. This area. So what you need to do is to continue to monitor what is going on. Okay, all the stops that are here needed to be taken out. So you continue to measure them. Okay, using your horizontal line. All you need is your horizontal line. It is not as difficult as that. Just your horizontal line to measure the stops, just to place a stop there. Okay, so this area we have stops there. Let's change the color so I can identify what is going on. Okay, good. All right, so there's a stop here. This candle came and stopped exactly on this point, and that was the reason for the bounce. Okay, caused the bounce. Okay, all right, so now look at this. Is another stop here. Okay, that's another stop there, and we still have another stop here, even though there is another one there. It's tiny. Okay, then there is another one here. Well, I wish that the tiny one, maybe we should change the color of the tiny, that one there. Let's change it to something like green so I can identify what is going on. So if you continue to move, okay, okay, for now probably maybe we should just switch to the 1 hour chart so that we can really know what is going on at the left area. Okay, because those areas also determine the extent to which price can go. Okay, so this is it. Can you see? So all these areas. Okay, good. I told you also in time past that even in our last lecture that price love all what we call double bottoms, triple bottoms, and so on like that. Okay, so price love them so much. All right, so now here you could see this area we have another stop here. Okay, we have another stop here. Okay, all right, so all these areas are very important. So this area, we have one here too. So you just monitor what is going on there. All right, so if you look at this area very well on a 4 hours chart, it looks like a double bottom. Okay, So and price loves so much. I told you in the last lecture that if price can come and take out this, there is also a possibility that they will take out this. And I told you where my take profits will be. I said my take profits will be from here 1 2 3 and this place 4 and probably this place 5, okay, and so on like that. So yeah, we still have some stops here, but I considered this area so much. And when you look at what has happened, this will be my last area. When you look at what has happened, let me choose it to blue. Look at, you can see exactly around that range, around the spot where the blue is. So price was able to get to this area. Okay, so it means you could have made profits. Okay, could have made profits all the way from here. Okay, so you use a lower time frame to get your input, to get your entry points. Okay, so this area now, looking at it from the, let's check it from the 15-minute chart first. Okay, what did we see? Okay, I showed you the reason why price can get to this area. I showed it to you. I told you that there is a confluence from my checklist strategy. Please, you need to go and watch that video so that you can understand my checklist strategy. I explain my checklist strategy to you, and I feel that you should go through it. It is very important. If you don't go through my main video, you might be finding it difficult to understand or what we have been saying this particular video. Okay, please go ahead where I said I just exposed my secret. Please go ahead and it is very important. Please don't take anything for granted. It is very important. And the last 5 videos where I've solved some analysis on Bitcoin, you can also go through it. Okay, so now I told you about confluence here. Okay, and when you look at what has happened, where did price stop? Just around that area. Okay, because of this confluence. Okay, just exactly around that area. Okay, so it probably stopped at the first candle that we can find there. If I put it closer to that candle. Okay, check. All right, you see exactly at that spot. Exactly at that spot. So in the last video I showed you, and exactly at this spot, that this was where I placed my stop, the horizontal line. That price is likely to get to this point, and if price gets to that point, please look for your price action candlesticks. Okay, so which are your price action candlesticks? Okay, from what is here, we have a bearish engulfing candle here. Okay, this bearish engulfing candle engulf these 2 candles. Okay, then engulf these 2 candles, and if we switch, let's see what this can give us. The Aikin Ashi. Let's see. Okay, when you look at the Aikin Ashi, you will see that it's giving us this particular candle is an inverted hammer for us. Okay, so which is also a signal. Okay, it's also a signal. Then you have the doji. Okay, that's also a sell signal. Okay, and a bearish engulfing candle that engulfed the doji, then followed by halfway drop. Okay, so we see already, I told you that that area will be a sell zone. Price could actually pass through it and probably stop at this area where you have another confluence. But once price is finding difficult to get to those areas and you are seeing sell signals, please sell, because you have a greater opportunity to sell. Why? Because of this area. I told you that's where the money is. Okay, so they have created all these bunch of stuffs in these areas for themselves. And while they were doing that, they were also creating the bottom. Look at, they were also creating the bottom. So immediately price took out all the stuffs there. What happened? The next thing was a fall. Okay, the next thing was a fall. So let me switch back to our normal candlesticks that I know that people are familiar with. Okay, all right, so now the same thing that has been happening here, okay, that happened there, and price crashed up to this extent. Let me switch to the 1 hour chart so I can expand the surface. All right, so now, so what did price do? Price ensured that they took out this area, okay, including this area, using this, and took it down. Okay, so they have been able to do this. They took out all this. If you place your horizontal line, you would see this is the last stop here. Okay, that's the last stop. And what has happened? Okay, you can see it has been taken out. Okay, taken out. Okay, so now what we will be looking at now is that currently we have price falling. Okay, well, naturally, because price is falling does not mean that price cannot go up, and that is what has happened here. Price came down and price went up. There is a reason for that. They are looking at where the money is. We have bunch of money here and they have taken them. We have money here and they have taken them. So now they are creating another one. Okay, so all you need to do is just to understand how they are creating the money. So where is the money? Where is the money? So right now they are creating money here. They are also creating money for themselves here. Okay, and you still have some here. Okay, you have some here, you can see. Okay, so now since we already know where the money is currently, we have seen that they are creating something here. Okay, and we also have something here. Okay, that is left for them out of this movement. Okay, this movement that came, we still have something here. So which means there is still probability for them to get to this point. Okay, now let us see if they may want to go further down. Would they like to go further down? It is possible. Okay, it is possible looking at what is happening here. Okay, but first, before we look at this whole area, look at this whole area. Okay, before we consider this whole area, let's consider this area first. Can they get to this area? This area is more likely, okay, for them to get. So probably if they get to this area, if they're able to clear this area, and if they are still willing to go further down, it means that they will use whatever is going to happen here probably as a stop. Okay, so possibly they may want to stop the coming down of this. They may want to stop possibly maybe around somewhere here. Okay, if they stop somewhere around there, somewhere around the green line, causing another miss, so this means we cause a retracement. So let's say on a probability they are able to drive the price downwards, okay, like this. Okay, then they cause a retracement. Okay, because this, they will create a miss for this one too. Okay, which is here. Let's change it to red. Okay, this is a stop here. So probably while driving the price down, they may stop just at the spot here. Okay, then causing a miss for this stop here. Okay, so the miss will do what? Cause a retracement. So all the money that has been created in this area will be taken out using this. Okay, will be taken out using this. So this, once price drops down, then they take it out, and they probably look for conference around this area where price can stop. Okay, probably maybe here. Okay, and if they still want to go further, they can come to stop somewhere around there. Okay, so depending, so you just need to watch out. So what are we looking at? What we are looking at is that we have, look at, we have stops here. Okay, we have stops here. Okay, and we also have stops here. Okay, looking at it from just from a small view from this area. Now, after looking at it from this small view, let's look at it from a bigger view. This area needed to be considered. Okay, so, and then there is possibility that they may want to stop their price. Excuse me, want to stop their price somewhere around here. Okay, probably somewhere around there. Okay, if they are able to drive the price down. Okay, they're able to drive the price down. Okay, to clear out the stops here, the double bottom. I told you they love double bottom. Price love double bottom. Okay, oh, it's a double bottom, price will bounce at that spot. Oh, sorry. Okay, they love it because they know that many people will place their stops around those area. Okay, many people will be placing their both their stops. A lot of people will be placing entry around this area and also stops around this area. Okay, some persons will be placing stops here, some persons will be placing entry around this area, and once you place an entry here, your stop loss too will be somewhere around there. Okay, and they will take all out. Okay, if you have decided not to place a stop loss and the size you are trading, the amount size you are trading is big, that can wipe out your account. Probably if price gets towards this area, they will take down the price towards those area. So depending on whatever amount of money they see in the market, we also determine how far they can also go. If they see that there are so much money to wipe out, okay, they can decide to clean out all the stops here, including this one. Okay, it is when they discover that there are no enough money that they will retrace back again to take out all the stocks that are here. So wherever the money is, where they are after. Okay, wherever the money is, that is where they are just after. So if the money, now currently they have created stops here and they have created here, so they either take one out then take the other. Okay, so now they have created stops around this area and we needed to also take the stops in this area out. So what will they do? First way is that they come down, okay, to take out these stops, okay, and the stops here, and probably stop around this point, okay, where you have this, excuse me, where you have the green line, okay, where you have the green line. So that they can cause a miss for this yellow line where you have this stop, and then after that, to take out all the stores that have been created in this area, then they drive the price to take out all the stops. So using your confluence, okay, you can know where the price will stop. Okay, once you start seeing price action candlesticks for reversal around this area, okay, you can sell again. Okay, around this area you can start looking for another sell. Okay, so but for now, that is that's the first way they can drive price to take out stops. The second way is that you already know you have stops here and you have stops here created. Okay, so they either go up, okay, then after taking out all the stops here and stopping at a confluence value here, okay, then they crash it down, just exactly what they have done here. Okay, they took the price up to take out all the stops here and then drive the price down to take out all the stops here and here. Okay, so the same can also happen if they actually want to drive the price down so much. Okay, let's assume they want to drive the price down so much so that they can take out all these ones at the same time, then there is higher probability that they will want to take the price up, okay, then crash it down to take out all these ones. Okay, they can do that. So that would be one of the most convenient way to take out all these ones. They drive the price up. So what they will do possibly is to create even more consolidation like this, create more, and it's going to be well aligned this time. Okay, unlike this one is not even aligned and we still made money there. Okay, so in this case, look at this one is more aligned. You can see very aligned, so they can create more and then drive the price up as possible, then crash the price down again. So those are ways to which we are looking forward to on how. So in the first, what usually happens is that, for instance, let's assume that you are not able to monitor the movement of price around this area. Okay, you're not able to monitor the movement of price around this area. I told you sometimes you may not be chance to start monitoring the price, the monitoring little details of price. Okay, so that is the reason for the strategic day trade analysis. It gives you, it makes you trade even much more confidently and easily, okay, without stressing yourself. You don't need to stress yourself at all. Okay, so all you need to do is just to make sure that you just draw something like this. Oh, this is where the stops are, okay, and this is where the stops are. So all you need to do is they need to take one out first. If they take this one out, then you follow it down. Okay, if they take this one out, then you follow it up. Okay, so now in this case they took out the stop first, so all you need to do is just switch to a lower time frame so that you can get the exact point to enter. So switching to either the 5-minute chart or the 15-minute chart gives you an entry at that area. Okay, so the same thing that you're going to do in those aspects too. You look at it, can you see? So they did this, okay, and you could not follow it up. Okay, so it means you missed what is going on here. No problem, but you will not miss the down move because it will be very clear and glaring for you to see that it is time to sell the market, and you make more money even selling the market. You can see. Okay, so very clear for you to sell the market. So you don't have to be worried, oh, you want to make all the money in the market. You don't have to make all the money in the market. Just make your own out of it and leave the rest for them. Okay, so you may not be able to follow all these movements. All you need to do is just to wait. Just allow them to take out the major stops in all these areas. Okay, then if it is the down part too, you can see if it is down part too, You can see if you actually wanted to trade the down part, look at the stop say double bottom. I told you they love double bottom. Immediately they took it out, they're able to drag the price on. Okay, look at double bottom, double top. Immediately they took them out, you're able to drag the price down. Okay, so they love those double tops and double bottoms so much. Okay, all right, so the same thing that we are expecting around this area too. Okay, so you don't need to panic, you don't need to be bothered. Okay, so all you need to do is to wait. Which one will they take out first? Okay, you can see clearly using the 15-minute chart that they have created. You have stops here, you have one stop here. Okay, very important. You have stops here, you have stops here, and you have stops here. Okay, so all these are where the money is. Okay, so price will always move in the direction of the money are placed. So the strategy is very simple, very simple. If you place your horizontal line, you can also place your horizontal line to know, look at this is double stop here. Place your horizontal line on it. Okay, you can see what has happened here according to our psychology. Okay, we have a bunch of stops here. Okay, price was coming to take out this stop, but what happened? There is a miss there. Okay, you have a miss. Okay, and the next thing is that it caused a retracement. That retracement took out all these stops here. You can see the stops here are symmetrical. Okay, and they look at sweep down. So using even the 15-minute chart, you can see trade what is here, because we already know that this is going to be a miss. Okay, because of this stop, they will likely cause a miss, and causing that miss, they will retrace the price down. And how long can your retracement go? One of the ways to know is where are the stops, so they want to take it out. So you are sure that this line will be taken out, so you can place your take profits around this line area. Okay, if you just want to be moderate, you don't want to be moderate, you want to take more profits, then you can use confluence to get where, check through the left side to get exactly where the price will stop. Okay, somewhere here you get the next line. All you need to do is just to continue to get the next stop. Next stop, they will continue to obey the next stop. Okay, so when you check through, you will see, okay, those areas. Okay, they use this one, this one's here, we have this one's here, we have stops here. Okay, we have stops here. Let's use this one now. Okay, yeah, so this one, so they use this one to stop here. So if you want to be greedy, you continue to use more confluence stops to know where price will actually end. Okay, so what I like you to be moderate. You will know that price is likely to come to take out the stop, so just place your take profits somewhere around there, and you are good to go. Within how many minutes? This is one candle. Don't let us count this candle. You will place your entry at halfway into this candle. Okay, halfway through into this candle, it got halfway through, so you are placing your entry somewhere around there. So this first candle, 15 minutes, another 50. So in less than 30 minutes you have made your money. Okay, in less than 30 minutes you've made money. Okay, so that is how the market works. All right, so now, as I was explaining, there are stops here. This caused a miss, caused a retracement. They came back down and took the stops that are here, brought it down to this place. You can see clearly. So these ones, these two stop, double top here, caused a miss for this stop here. You can see they could not get to where this stop is. So these ones caused a miss for this stop. This stop here also caused a miss for this one. So the next time they are coming back to this place, they are coming to do what? To take them out. Okay, so and they will also want to take all these ones alongside. Okay, and probably if they want to do this too, either they take these ones out too at the same time, or stop somewhere around here so that they can cause a miss for this particular stop too, because there is also one here, okay, and there is this. So this one is causing a miss for this, so the next one can also cause a miss for this one. So they will drive the price downwards to do what? To say they are having what? A retracement, and that retracement will go a long way to also take out all the bunch of stocks that are down. Okay, so it is as easy as that. The strategic day trader analysis is very simple. It gives you confidence, so it is assuming that you are not able to follow the price up. What it means is that you will be able to follow the price downwards. You will see the signal, okay, you will see the signal, confluence, resistance, and price action. You will see the price action around this area, just like you've seen in this area too. Okay, so the same thing will happen. Okay, so we are waiting, okay, for higher confidence of trading. You may decide to say you want to wait, or if you want to follow every movement, okay, you can follow every movement. All you need to do is just to watch out for your price action. After the takeout of stops, watch out for price action. Look at after the takeout of these stops, okay, watch out for price action. So this is one price action, okay, and halfway through this candle came to give us an halfway through into this candle, and the price was driven up. Okay, so wait again for another price action candle. This is a bearish engulfing candle here, drove the price downwards. Okay, this is a bullish engulfing candle, drove the price upward. This is a bearish engulfing candle, drove the price downwards. Okay, that's after the takeout of stops. You can see this one too, it was after the takeout of the stops that are here. Okay, so after the takeout of especially important stops, look at this is a double bottom here. Okay, so after the takeout of this double bottom, look at what will happen. Price will also likely drive up. Okay, so you can see we are having a bullish engulfing candle here that gives the signal to go up. Okay, you have a pin bar here too, halfway through into this pin bar. This is also a bullish engulfing candle. These are signals to go long. Okay, so that is, you know, trying to be a scalper. Okay, so but I like to trade in a more confident way, so I allow the price to run its mouth. Okay, I allow the price to run its mouth, then I strike it. Okay, so that is what I do. So if price, I've explained to you, if price wants to misbehave, either way it's going, I will strike it down. Okay, so now price may decide to want to take out all the stops that are here, okay, and including these ones here. Then in that way they will have created stops. They are already creating it. They have created stops here and even create more stops here, so they drive the price up to take out all the stops that are here. Okay, or they take out all the stops that are here, all these stops, okay, then drive the price downwards to take out all these stops here. Okay, and it may include all these ones. So if they're able to take the price up like this, they may drive it down to take out all these stops here. So we will be clearing all these stops up to this angle, up to this area, possibly on a minimum, up to this area on a minimum. Okay, so let's use this confluence here, this confluence. Okay, so that's 21,550. So on a minimum, we should expect price to get towards this area, or there's another stop here. There's a stop here, so okay, let's use this place. Okay, so price can get to 21,700, so something like that. So because there is a confidence stop here, so all these areas as take profit areas. These are take profit areas. Depends on whatever the price wants to do. Okay, and look at this area too. It's also a double bottom, so they will also plan for this area too. Okay, they will plan for this area. Okay, and once they would take out all these areas, they may also want to plan for this area. Okay, and look at another double bottom here. Okay, so probably price is crashing down back again. Okay, so but all the structures we created, you will see clearly if they will be going they will be crashing it down. So just like as they are placed, be making their movements, they will continue to move in such a way that you will be able to know when to place your entry and when not to place your entry. So if you have questions, please send your questions to me. Send your questions to me through the comment section, and click on the notification bell. Subscribe to my channel and also click on the notification bell, so that anytime I'm live, you will have opportunity to be notified. Okay, so I'll be expecting you in the next video. Now, see ya.